Did I not tell you to buy Palantir last quarter? Should have listened, too late. Welcome back to Strongman Personal Finance. So Palantir Technologies Incorporated, ticker symbol PLTR, has been one of my favorite stocks for the last couple of years. When everybody was talking trash about how this stock was going to zero, I kept faith. I kept telling you to buy and buy and buy. And now we're up from a low of like 6 something all the way to $27.31. The rest of the market took a massive dump today. Palantir is up 13% after hours because of an amazing earnings report. Let's check it out. So Palantir reports their second quarter FY24 results. Revenue grew 27% year over year. So if we look at their prior revenue growth rates, basically what was happening is they had a massive deceleration in revenue growth. We can see that they hit a low of year over year revenue growth rates in the second quarter of 2023. Now we're in the second quarter of 2024, and we're looking rosy. Back then, year-over-year revenue growth was 12.75%, and, a lot of people thought the company had peaked. But I stayed strong because I knew Palantir was going to come back. So now we have pretty incredible revenue growth of 27%. They have re-accelerated their revenue. U.S. commercial highlights. U.S. commercial revenue grew 55%. 55%. So this company is not just making money from the U.S. government and other governments. They're making money from U.S. corporations, and there's a lot of corporations out there. U.S. revenue grew 55%. U.S. Commercial customer count grew 83%. So as they add customers, you're going to see the revenue trickle down into the future. When you first add a customer, you don't recognize the revenue up front. You recognize the revenue in the future as you earn the revenue. That's why when they have an incredible customer account of 83% growth, you're not going to see that right off the bat. It's going to be delayed, but it's happening. I could see Palantir having 100% revenue growth year over year in the future. U.S. commercial remaining deal value grew 103%. There's no growth in Palantir. Palantir's dead. U.S. government revenue grew 24% year over year. So even their worst business segment when it comes to revenue growth is up 24% for the U.S. government, and government revenue overall grew 23%. And the U.S. government spends like $7 trillion a year, okay? Palantir is going to be fine. They closed 27 deals over $10 million. Customer count grew 41% year over year. GAAP net income of $134 million, representing a 20% margin. 20 cents out of every dollar of revenue goes to you as the shareholder. Profits. GAAP income from operations of $105 million. This is profits before interest and taxes, representing a 16% margin. If we go look at their prior operating margin, which is buried somewhere, we could see that every single quarter it's gone up and up and up and up and up. I wouldn't be surprised if they got operating margin into like the 30s at some point. 30, 35% positive operating margin at some point in the future. Incredible. Told you to buy it. Didn't listen. GAAP EPS grew 500% year over year. So people always point to Palantir's revenue and they say, hey, their revenue is only growing XYZ. Well, it's all about the profits, and their GAAP earnings grew 500%. I'm surprised the stock hasn't grown 500%, but there's still a bunch of bulls or bears out there. Cash equivalents, and short-term U.S. Treasury securities of $4 billion of cash. Cash from operations of $144 million, representing a 21% cash margin. 21 cents out of every dollar that they earn in cash gets to you, the shareholder. It's pretty amazing, huh? Okay, so we cover their profit and loss. For Q3 2024, we expect revenue between $697 and $701 million. So if we look at the third quarter of the prior year, let's see. So the revenue in the third quarter of last year was $558. So let's go ahead and do on the low end, 697 divided by 558. On the low end, they're forecasting 25% revenue growth. And on the high end, they're forecasting 25.5% revenue growth. They're probably going to beat it, okay? We're looking at a huge reacceleration of revenue growth. Adjusted income from operations of between 23 to 27 million. So that's an adjusted operating margin of 33.8%. Holy smokas. That ain't no jokers, okay? A little bit down from this quarter, but that's fine. We raise our revenue guidance to between 2.742 to 2.75 billion. So on the high end, we're looking at yearly revenue growth. Let's see. 2.75. So let's do 2750 divided by 2225. We're looking at 24% revenue growth year over year. This is their guide, and they're probably going to beat it. So I'd say 26% year over year revenue growth. We raise our U.S. commercial revenue guidance to in excess of $672 million, a growth rate of 47%. Commercial's good. And they're raising their adjusted income from operations guidance to almost $1 billion of operating income. Adjusted free cash flow guidance between $800 to $1 billion. Insane. Let's go look at the financial statements. Somewhere buried down here. Okay, so we know revenue has gone up. Let's see how much their gross margin has improved, if at all. So their gross margin for the most recent quarter was 81%, and their gross margin for the prior quarter was 80%. So they slightly grew their operating margin. Sales and marketing expenses actually grew pretty quickly. R&D grew a little bit slower pace, and general and admin barely budged. Total operating expenses have increased by 444,233 divided by 416,344. Total operating expenses have grown by 6.7%. So their expenses grew by 6.7%, but their gross margin grew by 28.8%. So if you're growing your gross profit faster than your expenses, guess what? You get a lot more profit, okay? Interest income has grown 46,593. Interest income has grown. I think I did something wrong there. 46,593 divided by 30,310 has grew by 54%. 54% growth in interest income, okay? This is basically a bond fund. This is basically an ETF. You got a bond portion and you got a stock portion. This is a balanced fund, okay? Income from operations. Oh my God. Look at that growth. What, 1,045% growth? Why is the stock up so much? Yeah, should have bought my course, loser. Okay, let's see. Net income. Okay, so basically earnings are exploding. Now, share count. Let's look at diluted shares. How many shares are we issuing here? 6% growth. So share count's up 6%, but operating income or net income is up. Or what was it? Operating income is up like, what, 1,000%? So the dilution is fine. Stock-based compensation. I told you this was going to go down. Overall, it's increasing a little bit, actually, it looks like, but that's because the stock price went up, but nothing crazy. Let's look at their balance sheet. So they have $500 million of cash and $3.5 billion of marketable securities, all generating interest. Accounts receivable has almost doubled. This is money they expect to receive from contracts that they've earned, but they haven't received in cash yet. Huge increase in AR. They basically have $4.7 billion of mostly very liquid assets versus total liabilities of $1 billion. So they have net assets. If you just look at cash, just cash minus debts, they have $3.7 billion of cash. Free and clear. Free and clear. Interesting, huh? Property, plant, equipment, they don't have that much. It's actually gone down, probably because of depreciation. They've got way more leases than PP&E. Their total assets are $5.2 billion. Versus total debt of $1.1 billion, $1.05 billion. Very solid, amazing balance sheet. Common stock, we see a little bit of issuance, but we know there's a little bit of dilution, but nothing crazy. And we have an accumulated deficit of negative $5.4 billion. So their total losses have still been $5.4 billion. But over time, this is going to swing positive, 100%. Let's see, cash from operations. So they had cash flows of operations that were basically flat. Let's see why. So we see a big subtraction here of accounts receivable. Basically what this means is they accrued accounts receivable, so they earned revenue, but they hadn't gotten paid yet. So they had to subtract $300 million, but that's going to be received very, very soon, okay? That's just a timing difference. Let's see what else is different here. Prepaid expenses, nothing crazy. Other assets. Here's a big swing here, accounts payable. So they actually had they accrued but haven't paid $53 million of accounts payable. Accrued liabilities, same thing, but the other way. Deferred revenue, interesting. So we see deferred revenue is basically cash that they've received that they haven't earned yet. Let's see. So overall, it looks like the biggest difference was this. It's mostly balance sheet. It looks like. Let's see, stock-based compensation. Yeah, the biggest items are accounts receivable and accrued liabilities. That basically made cash flows from operations flat, but that's a timing difference. What did they do with their cash? Well, with 273 million of positive cash flow, they bought 5 million of property, plant, equipment. That's nothing, and they piled most of it into marketable securities to generate income. They made almost $100 million from their employees exercising stock options, and they spent about $26 million buying back shares. So they're doing a little bit of buybacks now. Interesting. But overall, they generated a huge amount of cash. So basically, they took all their cash and mostly piled it into marketable securities, bonds, to generate income. So overall, I'm extremely bullish. I actually have a price target of about $55 per share by the end of the year, regardless of what happens to the stock market. And this is what it means to be bullish on a stock when everybody else makes fun of you. And that's it. This is justice for me. If you like this video, don't forget to hit like and subscribe. If you want a personal video, it's going to cost you $50. See the pinned comment below. I don't do stock price predictions. Check out my book, Stop Being a Broke Loser. It's on Amazon. It covers all the details about how I picked Palantir. And if you want a one-on-one tutoring session, it's $75. See the pinned comment below. I am a certified public accountant. I will teach you financial statements. Have a wonderful day.